Great. Hello, everyone, and welcome. I'm Janice Shee, and I am the director of the Low Income Taxpayer Clinic here at Maryland Volunteer Lawyer Service. And I want to thank everyone for joining us. We have two really great speakers today. I'm really excited to hear a little bit more about the updates from the Maryland Comptroller's office. I know they've been busy working. Even though some of the offices are closed, they have continued to work very hard. So I want to thank them for that. Just want to go over a couple of quick logistics in general. So if you'll please follow us on social media. We have a lot going on at MVLS. We are up and operational, completely operational, and still accepting clients and still looking for volunteers. So please join us with that. Jay, if you'll move to the next slide.
Okay.
If you are not already a volunteer, and I do see many names of people who are already volunteers, so thank you so much for doing that. If you're not, we do encourage you to join us. It's a great way to put some of this information that you're receiving into practice. And to find a client, you'll go to our pro bono portal, which is on our website there. Jay, if you'll move to the next slide, please.
Sure.
This is what it looks like. There's many categories of the types of legal issues that MVLS works with. Tax is the little blue box there. Even though it's a small box, we are still a mighty program and definitely have lots of clients and lots of volunteers that we need for them. Next slide, please. In addition to the other benefits of being an MVLS volunteer, you do have access to all of our recorded trainings, including this one. Jay and Melinda have very kindly agreed to allow us to post the slides as well as the webinar recording afterwards. So as a volunteer, you do have access to all of our recorded trainings as well. So, okay, next slide, please, Jay. So if you are not a volunteer, we do encourage you to sign up today. Lots of benefits of being a volunteer, including these trainings such as this and great mentors like these guys. So next slide, please.
There we go.
So, before I let Jay start, I'm going to just ask everyone to, if you do have any questions, we're going to please go ahead and write them into the box. Can't hear you at all. If you can please write them into the box under questions, and we will address them at the end of the presentation. I'm going to kind of hold off on the questions till the end to allow our presenters to continue through uninterrupted, and then we'll be able to answer them at the end of the presentation. So I'm going to let them introduce themselves now, and thank you very much.
All right. Well, thank you very much, Janice. I'll start with my introduction and then segue over to Melinda. My name is Andrew J. Maschas. I've been with the Comptroller's office almost 14 years. I'm currently an assistant director in the Baltimore Compliance Division. I'm in charge of administering two sections, our business field audits section and also our hearings and appeals section. And my email is is there on the slide. That's the best way to contact me. I presume that there will be some questions about the material here. If there's other questions that you may have, you can certainly email me. So that's who I am, and I'm going to turn it over to Melinda.
Great, I'm Melinda Dunmire, and I am the assistant to the director of the compliance programs. And I handle predominantly the case review board. I'm the chairman of the case review board, and so I keep the offer and compromises moving through our division, and also handle the voluntary disclosure agreements.
Okay, well, so that's who we are, and we wanted to put this together to try to get some information out there and talk about the guidance that we've produced recently and some of the tax law changes. I can tell you in this, I can tell you that it's been extremely difficult. Or it's been an interesting challenge, I would say, to be more accurate, this year because of the COVID-19 pandemic, and having to work remotely and having employees out of our office and being able to work on guidance together and as a group. Melinda and I have worked on a lot of the updates that I'll talk about during this presentation. But I think that we have been successful, and as we go through this, we'll talk about the guidance that we've been able to produce for taxpayers and representatives. So that being said, let me start out with our Maryland sales and use tax update. And the majority of my presentation today will be on Maryland sales and use tax updates. We'll talk about some other tax types where there's been an update. And for the sales tax laws, I've got two columns here. One that became law without signature that were passed by the Maryland General Assembly, and two bills that were passed by the Maryland General Assembly but vetoed. It was an interesting session. It closed early because of COVID-19 pandemic, and we had several bills that had a effective date of July 1st. We had a separate bill, not for sales and use tax, that had an immediate effective date, and I'll talk about that particular bill. But in addition to scrambling to put, to figure out how we're going to function as an agency without having employees and rolling out laptops and getting people out of work remotely, we had to figure out, what laws were passed, what guidance was necessary, forms and other updates. The Revenue Administration Division in Annapolis and work on that as well, updating the forms and booklets. So again, it's a challenging environment for a tax administration during this particular time, but I think we've done a pretty good job here. So I'm going to talk about, just give an overview of the exemptions I'll talk about today. The majority of the sales tax updates are really exemptions. There's artificial hearing device, ear molds, equipment and parts, aircraft parts and equipment, data centers, licensed caterers. I'll talk about licensed caterers extensively during this presentation. Qualified opportunity zones in Baltimore County and redevelopment areas in Washington County. Racing and Community Development Act 2020. There was also a sales tax sunset extension and study for peer-to-peer car sharing. There was two bills that did pass by the General Assembly but were vetoed by the governor. I will not be going into depth about the digital advertising gross revenues tax during this presentation. I do not know whether the General Assembly will override either of these two bills when they get back into session. I'm not good at predicting the future, so I won't opine on whether they will or will not. But the digital advertising gross revenue tax, there have been a few law firms and accounting firms that have publicly stated that they will challenge the constitutionality of that tax. So because it is a recorded webinar, I will not be commenting on that particular bill. The 21st Century Economy Fairness Act, I'll talk a little bit about this at the end. Again, also vetoed by Governor Hogan. I think the stated rationale for Hogan in the letter was that due to the fluctuation in budget and waiting to see what the budget turned out to be and whether this was an appropriate time to put it in additional sales tax was questionable. So I won't get into whether this veto was the correct thing to do or not, but I will talk briefly about those bills because they might come back up in January during the Maryland General Assembly as a veto override. Okay, all right, so the first exemption, artificial hearing device, ear molds, equipment and parts, is a very narrow exemption. My father is almost 82 and has a artificial hearing device. And what happens with this bill was it's a case of sales and use tax not keeping up with the times. It repealed an exemption for a replacement cord for an artificial hearing devices. When these hearing aids first came in, from the testimony, they came with a replacement cord with it, and that statute remained unchanged up until this session. And to my knowledge, certain businesses were charging customer sales tax because the literal language of the bill said it's only exempt if you have a replacement cord. We have these newer models that are custom-made ear molds and that are lighter, smaller. Again, my father has one of these. There's a very you can barely tell that he's actually has one, and it's in the ear, and it doesn't have a replacement cord hanging off of it. So this was a bill introduced by a group, and it passed. So it updates our statute, so there's no, I guess, controversy whether one of these businesses should charge customers sales tax on a ear mold or artificial hearing device, just because it does not meet the literal language of the statute. So new devices, smaller, lighter, no replacement cord, updates the sales tax law. Okay. The next exemption for aircraft parts and equipment. This exempts certain sales of materials, parts, or equipment used to repair, maintain, or upgrade aircraft systems or aircraft if the materials, supplies, or equipment are installed on an aircraft that has a maximum gross takeoff of less than 12,500 pounds, or has a maximum gross takeoff of 12,500 pounds or more, and is primarily used in interstate commerce. Okay, so the testimony in this particular bill was that some other states have an exemption for small aircraft, and particularly the parts that go onto this small aircraft. And the testimony was that because Maryland does not have an exemption, people were taking their airplanes out of state and having it repaired at those facilities rather than Maryland, and then this cost Maryland jobs and stymied the expansion of the small aircraft industry in Maryland. So this exemption was enacted to try to level the playing field among the states and try to encourage this industry in Maryland. It's very specific, 12,500 pounds. Melinda, I recall that we had a little bit of when we read through this bill, we decided, and this is actually in our sales and use tax guide, that it's really just the materials, parts, or equipment used to repair, maintain, or upgrade aircraft. So the materials, parts, or equipment have to be installed on the plane. It's not equipment used to fix a plane or fix the thing. So there's two differences between parts and, I guess, capital equipment that is purchased by the facilities. It has an effective date of July 1st, but expires on June 30th, 2025. So this is interesting because typically exemptions are permanent, but this has a limited window. There was some guidance that we looked at to determine what planes qualify for this. Here's some helpful links. Melinda and I got to learn about the aircraft industry and airplanes, which is value added this past few months. One interesting note about this is there's a reporting requirement, and the Comptroller's office is required to issue a report to the General Assembly each year for the following items: the amount of sales and use tax lost due to the exemption, and also the number of jobs, number of aviation technicians employed in Maryland because of the exemption. And so this is a report that has to be filed with Maryland General Assembly by the Comptroller's office each year. So we do have to find a method of determining these two pieces of information. And you may imagine, well, we're required to do it, and so I do not believe that there will be an additional line on the sales and use tax return requiring taxpayers to report this. We're going to employ an information gathering methodology to produce as accurate report as possible. To my recollection, during the on the fiscal and policy notes, there was approximately 10 airports that were affected by this exemption in the state of Maryland. So that might be one of the methods that we do go to gather this information. Okay, so next exemption. The sales and use tax exemptions for data centers. This is an exemption for the sale or lease of qualified data center personal property for use at a qualified data center. Melinda reviewed this particular sales and use tax exemption, and the rationale for this exemption was Virginia had a similar exemption for data center, and the number of jobs and the number of data centers that were created in the Northern Virginia area was tremendous. It experienced tremendous growth over the past few years or decades, and this was in the fiscal and policy note. The District of Columbia, I believe, had a similar exemption, but I believe that's been repealed, and Maryland, in the shortened session, was able to pass an exemption, a bill to exempt the qualified data center personal property. Melinda, how do you think that how did this bill compare with the Virginia bill, to your recollection?
Actually, the restrictions aren't nearly well, I guess it's not restrictions. In order to be eligible, the qualified data centers don't have to invest as much in the state of Maryland as they do in Virginia. So the legislators were really trying to be generous with this, so that to make it easy for data centers to be eligible and for them to expand into the state.
Got it. Yeah, there were similarities between the two bills, but it certainly is different. And I guess I'll just talk about briefly what a qualified data center is. It's a building or group of buildings used to house computer systems, computer storage equipment, and associated infrastructure that businesses or other organizations use to organize, process, store, and disseminate large amounts of data. That's the official definition of a data center. Again, I am never worked in IT, generally know how to use computers. So some of these items are, above my head as far as what they do, but the fiscal and policy note was particularly helpful in talking about what businesses they were trying to capture in Maryland and have and relocate their data centers to the state. I won't go over this every specific of this particular bill, but the qualified data center, it has to be obviously located in Maryland, and it has to be located within 3 years of submitting application for the sales and use tax exemption. It has to invest at least $2 million in qualified data center personal property and created at least 5 qualified positions within a specific Tier 1 area, or $5 million in personal property and created at least 5 positions in any other of the states. So it's very specific how much you have to purchase and how many positions you have to create. It also does talk about a data center that's co-located or hosting where other equipment, space, and bandwidth are available to lease to multiple customers. So there is the ownership component, and then there's also the leasing component. Real briefly, the definitions of the data center personal property are up here on my slide. The personal property that qualifies is computer equipment or enabling software used for processing, storage, retrieval, or communication of data, heating, ventilation, and air conditioning and mechanical systems, equipment necessary for the generation, transformation, transmission, distribution, or management of electricity. So there's a couple different items. Melinda and worked on some guidance for this particular exemption to further explain what would qualify under those three areas. And we're going to we're very close to having a new tax tip on the data center exemption and the application process. It should be coming out rather shortly. It would have been actually published in August, but even I deserve a vacation date or two, and Melinda. So, but we'll get that out shortly. What's unique about this exemption is that the application process, it requires you to first file an application for exemption with the Maryland Department of Commerce. And once the Department of Commerce reviews the application, they either approve or deny it or ask for additional information. And if they approve your application, you'll receive a special sales and use tax exemption certificate from the Maryland Comptroller's Office. So I want to just specifically mention during this presentation that the Department of Commerce is the agency that will review and approve the application. It's only upon their approval that they contact the Comptroller's Office, and then we issue an exemption certificate. So it's different. I think it's different than just your blanket sales and use tax exemption certificate. There may be certain purchases that might qualify or that may be exempt under other laws, but in order to get the full exemption for this qualified data center personal property, you've got to go through the process first. And our guidance is going to make clear that that Department of Commerce is the one that really reviews and approves it. So we're just, I think, the agency that issues the sales and use tax certificate, and also is going to be issuing guidance about what qualifies and doesn't qualify for it. So let's see. Okay, let me go back there. Okay. So Melinda, did you have anything to add to that particular exemption?
No, I don't actually. No.
Yep, but look for the guidance soon on that. I would imagine that'll be forthcoming very shortly, and I truly think that it'll be helpful because Melinda, I, and a number of other employees at the Comptroller's Office worked pretty hard on that one and to try to make it, try to explain it. And be helpful for taxpayers. Okay, well, here's one exemption that we did issue a business tax tip for, and that's business tax tip number 27, which is the sales and use tax exemption for caterers. Okay, there was a bill passed that exempts sales and use tax. It doesn't apply to the materials, equipment, or supplies used by a licensed caterer if the items are used by the caterer to perform catering services, are intended for resale to the caterer, and used directly or predominantly by the caterer in performing a catering contract that includes the provision of food and beverage. So here is one exemption based on the testimony. Certain businesses disagreed or disputed the Comptroller's position on purchases by caterers, and our position that certain items were not for resale. And this bill comes in that group's attempt to correct and our position or obtain an exemption for certain items for resale. So let me go to the next slide, if I can. So the exemption only applies to a licensed caterer. So if you're not a licensed caterer, this exemption does not apply to you. And what is a licensed caterer? It's a business or individual that offers catering services in connection with a specific event and holds a food service facility license issued by the Department of Health and Human Services. So this is another exemption where you have to obtain something else from another agency before you can get the sales and use tax exemption. And it's a licensed caterer is not included any business, individual, or food service facility that is primarily engaged in the preparation and service of food to the general public at the facility. And we interpret primarily engaged as more than 50% of the gross sales or revenue received by the food service facility is derived from sales of non-catered specific events. So when you're looking at this exemption, there's really three buckets of taxpayers. There's a taxpayer that provides 100% of their, or derives 100% of the gross revenues from licensed caterers. There's businesses that will derive 100% of their gross revenues from sales of food to the public. And then there's those in between. And those in between that will hold their doors open to the public, and you can walk in there at any particular time, and then also provide catering services to clients as well. So the interesting part about this is, so the exemption will will apply to a very specific group of caterers. And the caterers actually have to provide the catering at their own facility. So if you have a restaurant, let's just start out with, if you have a fast food restaurant that opens its doors to the public, you can name any of the different fast food restaurants where you can get pickup service there. This will not apply to them. If you have a restaurant that provides catering services, 25% at their 25% of the gross revenues are derived from catering events at the restaurant, this won't apply to you. It also won't apply to restaurants or businesses that do catering off the premises. It's really the catering services have to be on the premises. So there's kind of buckets of taxpayers, and you really have to read through this tax law. We produced business tax tip number 27 in response to this legislation. It has an effective date of July 1st, and again, it's an exemption for purchases. It doesn't affect the sales by caterers. In our business tax tip, we specifically outlined that there's going to be sales by caterers that tangible personal property that's not exempt from this, and we do list out several items on there. We list certain items that are exempt from sales tax if they're separately stated, such as valet car parking, coat check, delivery charges, and gratuity and tips, voluntary left for wait staff. But all the other sales of items such as food and beverages, linens, tables, flowers, and ice sculptures are still taxable. We also discussed room rental charges in there, charges for that. But this exemption goes specifically for purchases by caterers. We've talked about food and beverages, how that's really purchased for resale, and what items are materials, equipment, and supplies that are purchased to perform a contract for catering services, are intended for resale and used directly and predominantly by the caterer performing a catering contract. We decided to label those items for purchases that meet all three conditions as qualified caterer purchases. And we go through those and we provide a list of those items. And I think we have an extensive list of what items will qualify for this. I know that some individuals or businesses may disagree with the list that we came up with, but we think it's comprehensive and we think it's a fair, and it's our interpretation of the law as presented to us in 2020. So I would suggest that if you have a client or may have a client that will be performing or is a caterer or will be performing catering services, that absolutely take a look at that. It's available on our website, marylandtaxes.gov, and it's business tax tip 27. And if you search on our website for caterer using that code word, it'll be pulled up. So we issued that on June 29th, 2020, 2 or 3 days ahead of the deadline. And go. Linda, do you have any other comments on that?
No, I don't.
Okay, good. I'm covering it all. That's wonderful. We'll see. Okay, so it's we've got about 30 minutes into the presentation, so I'm going to move through some of the other exemptions quickly. There was a sales and use tax exemption for purchases of construction material or warehouse equipment if solely used in these particular opportunity zones in Baltimore County or redevelopment areas in Washington County. There's two specific projects. This is similar to the fairly recent exemption for the redevelopment of the Bethlehem Steel area and the Trade Point Atlantic area. It's limited. This exemption is limited to those specific areas, and the TPP that's exempt is limited to construction materials and warehousing equipment. It's not a broad exemption for everything purchased for redevelopment in particular areas. Let's see. Okay. And next, a similar exemption. If you like horse racing like I do, you were following the Pimlico versus Laurel Park and where Preakness was going to be held. As a native Baltimorean, I believe that the Preakness should always be held in Baltimore, and it looks like it's going to be that way for the foreseeable future. There's a bill introduced to help facilitate the modernization of Pimlico and Laurel Park area, and there's a sales and use tax exemption for the sale of construction material if purchased solely for the construction or redevelopment of those two sites. It's very specific, but it's I think it's also broad as what they consider to be construction material. Got it up here, and this is a summary of what's exempt, such as landscaping materials. If you have a client that's going to be working on either of those two projects, read through the bill. There's building materials, systems, landscaping materials. Not everything qualifies for the exemption, and the sales must be made between July 1st, 2020 and December 31st, 2025. The buyer must provide the vendor with an eligibility exemption from the Comptroller's office. There'll be a sales and use tax exemption for this for groups doing this particular work. It's very narrow. Again, there's other tax benefits in this bill. I believe there's personal property tax, either reduction or exemption administered by the SSTAT. At the Comptroller's office, we're concerned that I think there's also income taxes as well on this as well. So it's a couple different relief or reductions for companies involved in with this particular project. I don't believe that we'll be issuing a tax tip or additional guidance on the Baltimore County slash Washington County in this bill. Okay. So moving on from sales tax, I just want to make a plug here. The list of tangible personal property and services subject to sales and use tax. Bill last year requires us to publish this guidance. Melinda and several other employees of the Comptroller's office updated the list as required by law on July 1st. If you go to the Comptroller's website, look in the search function and type up list of TPP, the website will get you to that document. Take a look at it over. We've updated it for these particular bills. It's published right on the day before many of these bills actually became effective. If you have questions on specific sales tax issues, you can email sut@marylandtaxes.gov. If you have questions or comments on the list of PPP and services subject to sales and use tax, we set up a new email address for that, SUT guide. So if you happen to go through our sales and use tax guide and you said, I don't understand what this particular paragraph or something's not listed on there and I'd like to see that on there, you can send an email to that and we'll consider putting up in our guide. We've received a number of emails and questions over the past 3 months, and when we are able to address those, sometimes most often they'll make it into the sales and use tax guide. So it's a living, breathing document. Okay, outside the realm of sales and use tax, but still relevant as far as audits and revenue in for the state, 911 fees. There's little did you know, and you may check your cell phone bill or phone bills after this presentation, but there's 3 different 911 fees on communication services that have access to 911 service. It's a fee to maintain Maryland's 911 system, really important. There's a state, a county, and a prepaid wireless E911 fee. And it's charged on mobile and traditional telephone services, again, to fund the emergency services. Last year, effective July 1st, 2019, the fees was increased from 25 cents to 50 cents per month for each line of service. The statute also previously said it was one fee for one bill. So if you received one bill and it was for 50 different lines, you're only charged 911 fee of 25 cents. The law was updated to charge 50 cents for each line. So now it's 50 cents on each, all 50 lines on that particular bill. This year's bill for 2020, House Bill 6, imposes record-keeping requirements on vendors and also audit requirements on the Comptroller's office. The Comptroller's office is now tasked with the duty of auditing companies that charge or should be charging various 911 fees to customers. There's a report due on December 1st of each year as to how many audits we've done, what we've collected, various other items on that. So that's a new duty that's been imposed on us. And so let's see. Okay. All right. And one other item that has just recently come, well, I've personally just started receiving some emails from attorneys, and actually 4 in one day last Friday, about the new income tax pass-through entities and corporations bill. Essentially, PTE return is an information reporting return, and it says what's the income of it, and what are the members, and how much income is assigned to each. However, if there's a member, whether it's an individual or an entity, and it's non-resident, then the PTE is required to report that income and report the non-resident tax due on the non-resident members. It's not required to pay on resident members. This new bill allows a Maryland PTE to elect to tax not only the non-resident, but also the resident members distributor pro share. So the PTE can pay at the entity level for those resident members, individual and entity, if it makes the election. PTEs are still required to pay tax on non-resident entity members. That hasn't changed at all. The tax, if they elected, is the lowest county tax rate and the top marginal state tax rate for individual members. The tax rate for entity members is the state corporate income tax. Again, they retain the distributive cash flow limitations on that. So I think this is a big change that allows Maryland PTEs the option of changing it on charging the tax at the entity level on resident members. Perhaps that'll ease the burden on resident members. Perhaps not. I haven't received any comments personally. Melinda, do you have any comments on this?
Actually, I do want to point out the statute. It looked like there might have been an issue with the statute. You can read it and interpret it that the entity has a choice of filing either the non-resident return or the resident return, or return on behalf of the residents. But if there are non-residents, that return has to be filed, and the taxpayer has the option of filing one for the residents as well. It's not a this one or that one. It's an and or.
Got it.
Now, sorry.
There was actually a gosh, there was a letter from Maryland Attorney General Brian Frosch that was posted on the Maryland General Assembly's website, and it was the and or was an issue in this, and there was an interpretation issue. So yeah, it's one that I honestly I have to reread through it as well. But no, thank you. Yeah, there was an issue with and or in the statute. Okay.
Also, to go back to the 911 fees,
Yes.
I do want to mention that the Comptroller's office will also be coming up with regulations addressing the appeal procedures. That was specifically in the statute that the Comptroller's office had a duty to do that, and that the procedures adopted have to be consistent with those that have already been implemented.
Yeah, that's a very good point. We've received an additional projects and assignments at the Maryland Comptroller's office, so it's no resting on our laurels in 2020.
I have a quick question since we're talking about the 911 bill. Is this Is this the 911 fee where the phone is located or where the bill is sent?
That's a great question. There are some sourcing rules in the particular statute. I don't have those in front of me. I can, if I don't have it in front of me, whether it goes to the business address, but there are sourcing rules in there. I can't recall. I can, if anybody is particularly interested in that, they can email me outside of the presentation, and I'd be happy to get an answer for them. Linda, do you recall off the top of your head?
Actually, I'm pulling that up now. Yeah, off the top of my head, I don't remember. I'm just pulling up some of my research.
Sure, we can provide that information about the sourcing rules after the presentation. Okay. Also, with the income tax passed through entities and corporations, there was I guess, an addition. The bill altered the number of the requirements for worldwide headquartered companies in Maryland to use a special apportionment formula. Due to time, I'm going to try to move past this. I'm just bringing this to your attention. Let's see. Tax legislation passed, vetoed by Governor Larry Hogan. The 21st Century Fairness Act, in brief, the sales and use tax would apply to sales of digital product or digital code. This was another bill that also had sourcing rules for customers. So if you buy a ringtone, if you buy an ebook, songs digitally, I'm just tossing out those few examples. This would apply a sales and use tax to the sale. And as to Janet's question, there are sourcing rules for those vendors that identify where that customer was located, individual or business. The tobacco tax, sales and use tax, and digital advertising gross revenues tax, you're not reading that wrong. There was a bill with actually 3 different tax types in it. There was a tobacco tax rate change, sales and use tax on electronic vaping devices and the vaping liquid, and also a digital advertising tax. That was vetoed by the governor on May 7th, 2020. Both bills, the veto may be overridden in 2021, the legislative session. Again, I'm not going to predict the future. We shall see in 2021, but I can tell you personally that I'll be reviewing those, and I think Melinda and I and our team in Baltimore are reviewing those in case they do, the vetoes do get overridden. Okay, that is my update. Tax law. Maybe we can turn it over to Melinda.
Okay, great. Before we do that, I think we have one question about SB 523, and so maybe we should answer that now before we move on to the next topic. The question is, what is the status on Comptroller guidance and corrective legislation on SB 523?
Let's see. What is the status of guidance? Oh, that's actually a terrific question. There will be, I can tell you, because I inquired before this presentation, there will be updated guidance on pass-through entities issued shortly. I would venture to guess during the month of September. As far as corrective legislation, I don't know the answer to that. I did see that there was, again, a Maryland Attorney General's opinion from Brian Frosch on this particular bill. That's posted on the Maryland General Assembly website. Guidance will be forthcoming shortly.
Great, thanks. Okay, let me go ahead and switch over to Melinda's computer so that we can see her slides now. Okay, great.
Okay.
All right, Melinda, there we go. Yes, we can see you. Thank you.
You're welcome. And yeah, I'm pretty excited to announce this. This is, as far as I know, the first time that we have discussed this publicly, and that is that the Comptroller has come up with some new programs to assist low-income taxpayers, fixed-income taxpayers, and taxpayers that also are experiencing financial hardships. As some of you probably already know, unfortunately, there are limitations on who is eligible to apply for an offer in compromise. We also have problems with taxpayers who unfortunately have holds on their licenses. And so some of these programs, while these programs will definitely provide assistance to those persons, and I will go into more detail on that. The Comptroller's office has essentially divided these programs into 3 different categories. We have hardship cases, low-income taxpayers, and the income exceeds expenses. If these definitions or the names of these programs are a little confusing, I apologize, but the hardship cases, what we're really looking at are people who are facing a hardship predominantly because they're fixed income. These are taxpayers that may be on Social Security or may be receiving only pension income. Then, of course, the second one, the low-income taxpayer, is exactly what it says, a taxpayer with outstanding tax balances that has a low income. And once again, I'll get into the details on that one. And then we sometimes have the taxpayers whose income exceeds their expenses. And so we also have relief for those. I do want to point out from the start that under these programs, the liabilities still exist. The relief that they're getting under these programs is a stay on certain collection activity and releases of their license holds. And so the common benefits for the programs include that the taxpayer doesn't have to make a payment or enter into a payment plan. Any of the current license holds will be released. And here I say that there are restrictions on future license holds, meaning the Comptroller's office will not put a license hold, or report to the MVA a license hold. Their liabilities will not be referred to outside collections agencies. And unlike with the offer and compromise program, there's going to be little to no documentation required. That's going to vary with each of the programs. And since this doesn't have to go, since we don't have so much documentation being reviewed under this, the approval is going to be much quicker. Okay, sorry, I'm trying to, let me see here. My apologies, but my WebEx box is blocking I've got to move my WebEx box here. Okay, there we go. Okay, so the eligibility requirements, let me see here. Okay, so for the hardship, we're looking at the household income has to be 200% below poverty level. And this is common for both the hardship case and the low income case. And then as you can see here, the hardship, their only source of available household income is Social Security or pension. Now, in addition to the common benefits that I referenced earlier, additional benefits include that their federal income tax refund will no longer be subject to offset.
Linda, are you on a different slide? What I'm seeing is just the first slide right now. I don't know what other people are seeing, but.
Okay, let me see here. From beginning.
Yeah, seems like we're only able to see the first slide right now.
Huh.
Are you?
So yeah, clicked from the beginning and then resume slideshow.
Okay.
Automatic.
Okay.
What I'm going to do, let me close my PowerPoint and try opening it up again.
Okay, great. Thanks everyone for being so patient.
Yeah, sorry about that.
Yeah. Let's try this again. Here we go. Okay.
And slideshow.
There we go.
There we go.
All right. So one quick question about that last slide. The third category is where income exceeds expenses.
That's correct.
and not expenses exceed income.
Oh my gosh. Wow. Thank you so much for pointing that out, Janice.
Actually,
Yes,
one of our listeners did, so
expenses
thank
exceed
you
income.
for that.
Yes, thank you very much.
All right, here we go.
And
Yep,
yeah,
very good. Thank you.
you're welcome. You're welcome. And thank you for whoever called that. I appreciate that. And these common benefits, this screen shows, or the slide shows the benefits that are available to all three programs, because once again, the benefits are going to vary between the programs. And so but here we go again, there's no payments or payment plan required. The license holds are released. There are restrictions on future license holds, as well as these accounts will not be going to third-party collection agencies, and they will be approved much faster because they do not have the same documentation requirements that the offer in compromise does. Now, for the hardship cases and the low income cases, we determine whether we look at their income level and determine whether or not they qualify based on their poverty level. Are they at 200% below the poverty level? And we're looking at the Department of Health and Human Services scale to make that determination. I do have a slide in here that does show you by household number what that number is, or what that income is. Now with the hardship, it is restricted to persons whose only source of income is Social Security or pension. And they won't get any more notices from the Comptroller of Maryland, but remember the liability still exists. And they also won't have their federal income tax refunds offset, but any future Maryland income tax refunds will be offset. I also want to mention from the get-go that for all three of these cases, this hold on collection activity is relevant only to the year for which they're applying. And so, for example, if you have a taxpayer who has a liability from tax year 2015 and they are approved for a hardship case and collections activity is put on hold for tax year 2015, if they subsequently have a hardship in another year, such as 2018 or 2018 or 2020, then they would have to apply again for that tax year. This isn't something that starts with one tax year and then continues to apply subsequently for each following tax year. And then the low income, this one, it doesn't matter what type of income they receive as long as they're 200% below the poverty level. And they will still have the hold on collections activity, but the Comptroller's office will be reviewing these cases annually. And what they're going to be looking at is the income tax return information that comes in. Also, the taxpayer, if they do have a change in their circumstances, they should report, they should contact the Comptroller. They need to let the Comptroller know that there has been a change and that they no longer qualify. And then here we have the expenses in excess of income. And this is a pretty self-explanatory. When their expenses exceed the total household income, they'll qualify. And once again, the hold is subject to annual review. And they should notify the Comptroller's office if there are any changes. Mind you too that during the stay on collections activity, interest will continue to accrue. Okay, and these are the poverty level guidelines. And so once again, we're looking at persons with income below 200% of the poverty level. So it's this one right here, and then based on the household size. And once again, that restriction applies only to the first two programs, the hardship, which once again is the pension and Social Security income, and the second is the low income taxpayer. So you very well may have someone whose income exceeds the 200%, and no, they're not going to be eligible under the second, but they might be eligible under the third if their expenses exceed their income. Okay. And yeah, these are just some important pointers. The liability still exists and the interest continues to accrue. Oh yes, and there is no change to the liens. So if any liens have been filed, the liens, they're still out there. And the comptroller can file liens on these years that are getting the relief. The taxpayers must remain current on their income tax filings and notify the comptroller of any change in circumstances. And once again, I do want to point out this is an alternative to the offer in compromise when a taxpayer is not eligible to apply for an offer in compromise. A lot of the preparers know, the persons that request an offer in compromise know that we have a restriction based on statute that requires all outstanding liabilities on the account to be more than 2 years old. And unfortunately, there are taxpayers that obviously aren't going to meet that requirement, but they do need some form of relief from the comptroller's office, and this is it. And then again, the relief only applies to the years for which it was applied for. So if you have a taxpayer with another liability after they've already been granted relief for 1 year, you need to contact our collections office and request it for the subsequent year. Okay, oops, sorry, I didn't mean to bypass that slide. And to apply, you call the collections department. I have their number here, 410-974-2432, and request review for the low income hardship program. You can also request relief through a dedicated email box or a dedicated inbox, and that is the low income program at marylandtaxes.gov. And you request review for the low income hardship program. Make sure that you include your power of attorney. And then I'm just going over here how the difference between the two programs, and it's the eligibility requirements. Offer and compromise, as I said before, the liabilities have to be more than 2 years old, and that's not the case with respect to these three programs. And all past due returns must be filed. Actually, that is true for all of the programs. I'm sorry, that's true for all of them. So if they're applying for any of these hardship programs, they have to have filed all past due returns. And the offer in compromise, what the taxpayer is essentially requesting is an abatement of the tax liability. And if you're approved for an offer in compromise, the liens are actually released, the liability goes away, you're done once you comply with whatever the agreement with the comptroller was. That's not the case with respect to these three programs, or these three, well, this program in general. And then here, I know that I threw a lot of different variables at you, so I'm summarizing the different fact patterns and what type of case you would be requesting relief for. And so we've got the household income is below 200% poverty level, and their only source of income is Social Security. You're going to want to apply for a hardship case. Yes, they would qualify under the low income as well, but with a hardship case, their federal income tax returns and federal income tax refunds are not going to be offset and applied to any outstanding Maryland liabilities. The low income, we've got a taxpayer's household income is below 200% still, and their only source of it, well, of course it would be, their only source of income is unemployment, and they're below 200%. That's another one that can apply for the low income. If their income is below 200% and it's a mix of wages and Social Security, once again, that's going to be the low income because they don't meet that requirement that the that the income only be from Social Security or pension that goes with the hardship case. And then let's say we have a taxpayer whose income is above the 200% poverty level. which means they're not going to qualify for either of the first two, but their household medical expenses exceed their household income. And in that case, then they're going to apply for the expenses exceed income. And what I want to point out too is what we're looking at is the household income, not just that taxpayer's income. That's what we're going to use to determine eligibility. And if you have any questions about the program, you can email their inbox directly, lowincomeprogram@marylandtaxes.gov, or contact our collections department, which is 410-974-2432. And that is the end of my presentation.
Great. Well, thank you. So that takes us right up to 1 o'clock. So perfect. So one quick question, Melinda. What does the Comptroller utilize to define necessary expenses? So like for the IRS, we have the standard expenses, but does the Comptroller have anything, or do they look to the same IRS standards?
Unfortunately, that's one of those details that we're still trying to iron out. We're still working on refining the details of the program.
Okay.
I would say still apply, even though we don't yet have any type of guidance out on that. We will have much more definitive guidance coming out in the future.
Okay.
So I'm sorry, I wish I could give you a better answer than that.
And I do think that for everybody listening to know that this is a brand new program that was supposed to be implemented right as the pandemic was hitting. So I really thank Melinda for bringing this up for everyone just to be aware of. But I think they're still trying to figure out the details of everything. So, but it is in existence and it's just starting. So I think there's still a lot of unanswered questions as we go along. So
Right.
thank you, Melinda, for bringing this up and just letting people know that this is a program that is coming into existence, but still very early in the process. One last question about this is there a time period to apply to this, especially considering the present employment situations? For example, if someone today at this moment is considered low income or below poverty level because of their employment situations, can they apply? And then I guess perhaps if their financial situation changes, do these statuses then change also?
Yes, they certainly can apply. I definitely would encourage them to apply, even if it's just a temporary hardship. And once their situation changes, let's say, for example, that they do find employment, then they should notify the Comptroller's office and let the Comptroller's office know, because they may no longer be eligible for the program. It's going to, there are a few factors, for example, what their new income level is, what their expenses and income, the variance between those. But if they do get hired, the Comptroller's office isn't going to know automatically that this person is no longer receiving unemployment income. Our systems aren't connected such that we can tell who is receiving unemployment income, or if they've got a new job and that they're receiving wage income. Unfortunately, our system isn't advanced enough to know that. And so we're requesting that the taxpayers to tell us that, so that we can make sure that they're still qualified for the program.
Okay, great. And then somebody has a question about when these 3 programs take effect, and they are currently in effect, but again, because they are brand new, they're still working out a lot of the kinks in it, I think. So
Right.
Yeah, but great. Okay, well, very good. Well, thank you everyone for joining us. It's a little bit after 1 o'clock. I appreciate everyone staying on board until the end here. Thank you, Melinda and Jay, for all of these updates. And we certainly thank you for working so hard and continuing to keep things moving along in this crazy time.
You're welcome. Thanks for having us.
You're absolutely welcome.
Great, thank you. Okay. Well, thank you everyone for joining us. And if you have any questions, feel free to email me if you have any. And if you're also interested in a copy of the slides or the webinar, please email me as well. And we thank you so much for joining us. Great. Take care, everyone. Bye-bye.
Thank you.